The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome to the Option Block. This is where you need to come for all the best talk and information in options and volatility trading. I am Mark Sebastian, Chief Operating Officer of OptionPit.com, a.k.a. Awesome Seabass. And with me, the man, the myth, the legend, possibly the best-looking employee at Options Express, and certainly the fourth best-looking employee at Charles Schwab, John Gredius.
Who are the other three there, Mark? Thank you for that announcement. That was pretty nice. But who are the other three at Charles Schwab? I know there's Chuck. I've met him.
Chuck's a looker. Chuck's quite the looker. Then you've got there's one girl that works in the Tennessee branch. She's like a 9 out of a 10. And then
she's got the restraining order against you right now, though, right?
Yes. And then there's a really, really handsome gentleman in the San Diego branch that is, the guy just works out like a fiend. And, so there you have it. And then, obviously, representing Chicago, John Gredius.
Yep,
so,
here in the Midwest. And with those Midwest values. But, wow, busy week here for us at Options Express, and I'm sure we'll get to it in the trading block or express block. But obviously we were off yesterday, and it was pretty much on my end cleaning up messes from Facebook. They bled through the weekend and into our Monday here, and actually we're still trying to kind of work out a few of the issues that we saw with the exchanges and the routing issues that the whole industry experienced last Friday. So it'll be an interesting discussion.
Yeah, we're going to talk about that in a little minute. Not exactly the Nasdaq's best moment, but hey, have you seen Avengers yet? Is the question I want to know.
No, you know what? We had talked about it for months. My son is only 5.5, and of course there wasn't a doubt in my mind that I was going to take him day one. And a little part of me said, this is more of a mother-son date night. So I stayed home with my daughter, who's 3, and I let my son and my wife go out and see it. And she came home and said it was possibly the best movie she's ever seen, or at least for superhero movies. And I need to go by myself or pick up a buddy and get the heck over there because it's really good.
Oh, wow, that's awesome.
Have you seen it?
I have not. I wanted to go, and my wife insisted on Hunger Games, and that was that. So I have. You know how that works.
Yeah.
I want to go see Avengers. I want to go see Hunger Games. You know what you see? Hunger Games.
It's like I always say that to her. I go, if we never do what I tell you I want to do, then why do you continue to ask for my opinion? She's like, oh, it's like a formality,
Yeah, it's to make us feel good. It's to make the gentleman feel good.
No, I mean I've heard things that did $500 million like in the first 6 days.
Incredible. Wow. Just unbelievable. It's nice to know that Titanic and the 3D movie with Avatar are not going to be on top. There's something wrong with a non-superhero movie being at the top of the charts.
It was nice. It was nice to finally see the Hulk in a successful movie, because I've seen the last 2 or 3 Hulks and they were just terrible. So I thought Avengers was doomed, but I guess he was able to kind of lean on some of the other superheroes and pull one out. But no, I think it's on my queue. It's on my personal queue to get out there and see it.
Yeah, no, I can't wait to see it. Maybe you and I can go after the show or something like that. But enough about Avengers. Let's move into the trading block.
The trading block.
Here we are in the trading block, and day started out a little slow, had a nice crescendo higher. I think at one point we were up almost 10 handles, right? And then the market gave away everything. We closed with the Dow down a fraction, the S&P's up a fraction, and the NASDAQ down 8. Apple, which had been up as much as $10, closed down $4. And the VIX cash, or excuse me, as Mark Longo would say, the good old VIX cash closed 22.51. By the way, folks, I bust Mark Longo's ginormous D-LLS, but he is an excellent host of this show, and we are sad that he's not here. It bust his goatee.
Yeah, Longo is out in Disneyland, Disney World, whatever one is down.
Disney World, yeah. But anyway, getting back to, before we digress, the cash out closed right around 22.5. We saw the VIX futures close up. We saw basically all the major stocks kind of give away what had been really, really nice gains. On the heels of the euro basically getting completely smoked at the end of the day. And the only area where there was any type of real give back was in the bonds. This is a rare day where we saw the markets basically flat, the euro get crushed, and we also saw the long bond get absolutely smoked as well.
Yeah, the 30-year was off by just shy of a full point, down 24 ticks on the front month for June. But yeah, I kind of noticed that too. Obviously the thing's been on a tear, especially the long end of the curve here over the last 2 weeks. The 10-year in the middle of the curve hasn't really participated as much as the long bond. But yeah, when we started turning it around here near the end of the day, I expect to see a pop in there, and it just kind of went sideways. So I don't know if that's signifying a short-term top. Probably just taking a breather. Market didn't look like it had any direction today.
I did a study for Expiring Monthly, which comes out tomorrow, on what I was noticing was that the VIX and TLT, and I use TLT because for continuity. It's easier to track a cash index like VIX against a cash index like TLT than it is against the bond. Now, obviously, the bond is the better trade, and any real trader should be using the bonds. But there was traditionally almost every occurrence of TLT minus VIX landed in between 70 and 80, somewhere in the range of 90% of occurrences. And it's over 100.
Jeez.
And it was worse yesterday. And what we were noticing was that typically what you'll see before a major crash is you'll see the spread widen. Now, we've never seen, until the last month, that number never really got to 90. But it kind of creep up to maybe 80, 85. And then you would see TLT would top out for a little bit. VIX cash would absolutely explode. And that spread goes down to like 50. And then TLT would kind of catch up, and it would go back to about kind of the median level of around 72. And what we're seeing right now is that number is at 100. And my question is, what does VIX have to do to get that number back to kind of 70? Well, the answer is it has to go to like 45. So we need to see a major drop in the bonds or a major explosion in VIX. Either way, I can think of a lot of there are some things to cause some worry. What are you kind of seeing there?
I've never looked at this correlation before, but now that you say it, I'm sort of more of a bond futures versus SPX kind of correlation, and then one will tell me the other, needs to turn around, and you can kind of predict that, when you saw that move in the bonds. And when they're moving together, you said one of them's not going to last, and I have a pretty good idea of sometimes betting the right way. But here, when there was still a lot of worry going on in the markets and people were saying, hey, the bonds can't go any higher, obviously the bonds are going to go higher and the stocks are going to sell off. But I mean, right now, the bonds have been in a super long-term trend here. Longer than the equities and stuff. So if I was going to play it, I would think that the bonds would have to continue their upward movement. It was a weird thing that we saw today with them not really participating on the upside with a flat, to mixed day with the VIX somewhat up. But I think they're going to continue, and I think people that I've seen accounts blow out here that have tried to pick this top over the last 4 years in the bond yield or in the curve unsuccessfully. There has been no top. The only time we had a turnaround was about 3 months ago, and it was extremely sharp. It was 3 to 5 points in a few days. And it made it up. It reversed in almost the same amount of time. In about 3 to 5 days, in a few days, it was back up 3 to 5 points. Yeah. So, I'm thinking that, based on what you just said about the TLT VIX correlation, that we're going to see some type of move in the VIX. Yeah.
Well, and there's your play is, you can swap maybe TLT versus VIX obviously prevent blowout, some sort of call spread swap would be kind of interesting, right? But it's interesting. I remember a couple of years ago there were guys that were playing the long bond strangles, and they were trying to explain to me that bonds never crash down. Bonds crash down. They do. People don't think so because generally rates tend to ease, but we can see as violent moves down as we can up. Maybe not quite as violent, but John, what would you kind of speak to that?
I'm seeing what I saw today, something that we kind of saw about last week, 1 to 2 weeks ago, is if you look at the commodities. Gold was off by $20 today. Crude, which at one point was slightly higher, down $1.13. What you've seen is that it seems like people are meeting calls or something. They're almost, if anything was going up, they're selling it and getting out, and if anything was going down and they were short, they're covering. Because if you look at nat gas, that has been on a bear trend for the last 2 years, you can see that was up today when every other energy commodity was down. So, I think we're going to have a continuation of the stocks on the downside for the rest of the week. It's neat that you can actually predict what's going on, maybe happen in the broader stock market by what's going on in different commodities. But like gold, obviously, is another safe haven for uncertainty. But we're seeing it sell off right now, and I think that's the smart money is actually maybe possibly going into cash. This is kind of something that you see when people are just closing out positions, not necessarily making a play.
Yeah, and if there's any positives, it's probably on the energy side. We're seeing if there's any silver lining, it's the movement in crude and in Brent. What have you been kind of seeing on your commodity? I know you love looking at West Texas. What are you seeing in crude and energy and some of the other commodity stocks?
Yeah, we're seeing crude sell off, but we're not seeing IB sell off as much as you would think. It's not really corresponding, and it has been at a disconnect. That spread, which was in the mid to lower teens about a week and a half ago, is now I think around 18. I didn't check it today, but that's where it was on Friday. It's funny. The busier I get at work sometimes with some futures issues we had here on Thursday and the Facebook IPO for Friday and Monday, the less I get to kind of catch up on where things are at. But if you take a look at the dollar index, which has it kind of similar to a bond, and people fly there for safety, flight to quality. The 2-day sell-off that it saw on Friday and Monday completely retraced that today. So the dollar index is nearing its contract high for June. I believe it put up its contract high in the second week of January 13th, and that was at about 82.28, and today's high 81.96. And when you see that type of retracement, you got to imagine that it's going to try to go ahead and test that resistance up there at that level. But yeah, overall, oil looks like it's taken a break. I know it's moved down from 106 handle down to the low 90s here where we're at right now.
Yeah.
Is there more downside move? I would think you would have more consolidation at these lower levels before it continues to slide off. I mean, it wasn't really.
You think there's going to be some consolidation around 90 then?
Yeah, I mean that's what it looks like. I mean, I looked at the chart this morning. We do have some traders here who also work and stuff. So we do talk about the positions, and we had a lot of people that were short oil over the last few weeks. They have covered those positions. A lot of people's like, oh, I can stay in my short position. This thing might go down to 80. Yeah, it might come back up to 102 and test 100. Before it goes down to 80. It's always good to take some profit or at least some of the position off. So we did have a lot of people that closed it out, and that may be the reason that we're kind of getting held up. We have been in a $91 to $94 range here for the last 5 to 6 trading days. So consolidation is good. I mean, there's no real trend in crude. I know it's been between 76 and 106 for the last 9 months. But if the economies are slowing down, I know the U.S. is somewhat separate from Europe. But if they feel that Greece is going to drop out of the euro and that will spread to other countries and stuff, kind of puts a lot of things on hold. And if a lot of things go on hold, the economy sours and GDP slows down, and crude oil should continue to slowly drift lower.
And I've been saying for some time, I don't think demand is up at $90 a barrel.
It's not. I mean, if you look at the numbers, and I know I always mention the DOE EIA report that comes out on Wednesdays, but it is a good report. And if you look at the inventories for crude, I mean, they've grown for the last 6 weeks, for the last 6 reports. We saw something neat last Wednesday when it came out. Crude inventories were actually up by 2.1 million. Sorry, the crude inventories were up, and the commodity rallied. So you saw something there where, okay, this is a bearish economic release for crude oil. Right, should sell off, and what you saw was it actually rallied. So you can kind of tell that the smart money's on the short side. All they did was get a little nervous, start to cover, and then and then it continued to fall. But I agree with you. I don't think that a $90 crude oil is warranted.
No,
but I just don't think you're going to see. I don't think you're going to see any sharp moves. I think you'll just see a drift.
Yeah, I mean, I think probably 75 to 80, especially with nat gas. I mean, nat gas at least has had some turnaround, but it's still super ugly and needs to come in.
I mean, we had so many people talking about that $2 level in that gas, and I can't believe it literally bounced off there like a Super Bowl. If you put on a 6-month chart of June nat gas, I think the low of that day was $1.97. That thing has not looked back, and nat gas is a big, expensive contract to trade. And I mean, the amount of money that was made off that bounce is just tremendous.
Yeah, and but it's still super cheap is the funny thing. And if it's less than $3 a contract, that's not exactly super expensive. So
no, I mean when
that's going to put so much pressure on crude, right?
Well, I don't know. I think maybe that you're literally seeing a shift here in where people are allocating their energy funds, if you will, and they're maybe moving out of crude and putting it into nat gas.
Yeah,
could be a good play. You've had a long bear market in nat gas.
Yeah,
and crude oil has come up from the low to mid 70s, and that was up to 106. And so that's 50% rally right there. Maybe they're trying to move some money around. I mean, nat gas has not looked back after it bounced off $2.
Yeah, no, and nor should it have. I thought $2 was a little over the top. It was like it was so over the top. Sylvester Stallone would have beat it in an arm wrestling contest. No.
Over the top.
Yeah, you remember that? You remember that movie, Sylvester Stallone, the arm wrestling contest?
See, I just watched. I think if you have that type of Warrior from the Streets movie and you're looking for a good one, I watched The Warrior over the weekend. You ever heard of that one?
Yeah, no, I have. That's.
It's that MMA fighting. I don't know, 2 unknown guys.
Yeah.
Nick Nolte is the Nick Nolte is the father of these 2 MMA like UFC fighters, and I'm a UFC fan. I mean, I don't know all the names and stats and who's won who, but I do enjoy watching a beatdown every so often. But Nick Nolte, I mean, that guy has not changed his look since he looks exactly the same since he did in 48 Hours. I mean, the guy. He looks as drunk and worn out as he did then. But it's a really good movie. I know where we kind of started the
Well, that's Warrior? Is that what you're talking about? And it's Tom Hardy and Nick Nolte?
It's the word Warrior. Mm-hmm. Yeah, that sounds about right.
Oh, man.
Yeah.
Dude, Tom Hardy and Joel Edgerton would not want to be on the other side of one of their fists. I can tell you that.
Some big looking. No, if you like UFC fighting, if you like Rocky 1 and 2, I mean, it gets you off your seat. Makes you want to go out and beat some ass a little bit.
Mm-hmm. Absolutely.
But that aside, it'll be interesting to see what happens in the energy markets here in the next few weeks. I mean, really, we got to find out what's going to happen with Greece. I mean, I know there's a deadline. I think it's June 14th, June 17th, off the top of my head, where the Greek parliamentary has to come up with a new government. I guess we'll know mid to end of June whether they're going to drop out or not. You know how governments work; they'll extend it, and things will change, and we won't really know anything probably till the end of summer.
Yep, probably not. So who knows? But I think that's a nice extended trading block we just went through. Covered everything from the VIX to over the top and Warrior. With that, let's cut out of this trading block and move into the Express block.
The Express block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
And now with the Express block, if you haven't figured out what this is, even if this is the first time you've listened to this show, you should know that now we get to listen to a guy like John Garrigas, who has years of trading experience, does great work for OX and now Schwab. Talk about what his customers are doing, what his customers are seeing, what problems they have, and some systemic things that the general retail public and even the institutional public cares about. So, John, I know we're going to talk about Facebook. I think everybody wants to know can you walk us through exactly kind of what happened, what resolutions there are, and then maybe in the back end, you and I will just kind of talk about Facebook valuation.
Yeah, I mean, last Friday was a monumental day here, I think, in the industry and for a lot of other broker-dealers out there that were, trying to facilitate the customer and try to trade Facebook that day. I mean, we prepared, Schwab prepared. We had meetings on this. I had people up at 5 a.m. testing orders. A lot of things went on that week, with the amount of phone calls that we received, people trying to open up accounts. You may or may not know Schwab does participate in certain IPOs. They did have a small allocation. A lot of things to go over. One, first and foremost, because you have 500 friends on Facebook doesn't necessarily mean you should be trading securities. I mean, there was a tremendous amount of interest in the public who had never had experience in derivatives or securities. So, it was a great opportunity for us to educate these people, but the time that they became interested was within 48 to 72 hours of the IPO. And the amount of people that called in just made it impossible for us to actually facilitate these people in the normal way we usually do, where it's a lot of hand-holding, a lot of education, a lot of, here's what you can go on the website, here's some links. It kind of really broke down on late Thursday, Friday. We had people try to open accounts, fund with credit cards. I want to buy one share. Send me the certificate. How much is the certificate? Well, it's $500. Okay, forget that. But so going into that morning, we had staffed probably about double what we normally do. I think Schwab was in that same arena. We have a lot of licensed people here, a lot of traders at Options Express that don't necessarily work the phones, but when the time calls, they do step up. We had cashiering, international, account services. Our team and brokers in El Paso were also on the phone. So we had about 25 to 26 people. We normally have about 15, so almost double what we had. I haven't verified it yet because, like I said, I'm still doing some work on some of the issues from last week. But we took almost over 1,800 calls. We do usually 700 to 800 in a given day, so we're at about 2.5 times what we normally do, and they were all Facebook. People who don't normally take calls were worried about getting on the phone, and I'm like, you're not going to have a problem because it's just Facebook.
Now, here's a quick question: how many calls were from Tim Navabi trying to invest?
Well, unfortunately, because Schwab does participate in the IPO, it is on our restricted list, so we were not allowed to trade it that Friday. And I just want to thank whoever put that on the list, because you saved everybody here a whole lot of dough. But I think we looked at some metrics. We did about 5,000 trades in Facebook, which you would say, anyone, in your mind right now, you're going, oh, that's not a lot. But I mean, we're Options Express itself is a very small firm, and we're derivatives based. People trade options with us, they trade futures with us. So to have 5,000 trades in one security on pretty much a half day, because they went public or secondary trading began at about 11:30 Central, it's a significant amount. So let me recall some of the events. I mean, you saw CNBC; they had a countdown clock going. They had live coverage of Zuckerberg ringing the bell that morning, and if you saw when the countdown bell hit 11 o'clock, they just kept redoing 10 seconds. And then they NASDAQ issued a memo that said that trading was going to begin at about 11:10 Central. Well, that came and went, and at about 11:30, trading finally began, and immediately we knew there was a problem, because everybody was on the phone with a Facebook client. They could see that it opened up at, I believe, 42.05. A lot of people had placed orders, $40, $50, $60, $70, and none of the orders were filling. I had put a website message up globally that said you cannot place market orders, so we didn't have any issues with that. There's regulations that say you cannot put market orders on IPOs until trading begins in the secondary market. We still had about 500 people place market orders. So, I mean, that type of mentality is what came to the Facebook IPO. But so...
Well, it's funny you mentioned the CNBC, and, I think that those commentators were looking, they were talking about Facebook and its IPO the way Miguel Cabrera talks about a salami sandwich. They were you could see them sweating and licking their lips and ogling the Facebook trade. It was hilarious. And
at one point, I think I looked up and I think two of the newscasters were wearing hoodies over their head, as a joke.
And, the funny thing is that, it goes to show you the difference between financial media and traders. It was not a huge story among guys that actually trade. It was a huge story, I think, in the financial media and in among journalists who sit there and assess over Facebook. So I think that you brought out a really good point about kind of the calls you were making about having 500 friends. And that was part of what got these journalists so excited about Facebook. They're like, oh, something I use going public. And, as opposed to, Triquent Semiconductor, what they don't know anything about it, all right? They have to trust some analyst. All these guys know about Facebook and their advertising. It was like Prince Fielder and a vegan pot, a giant vegan bowl of pad thai. It was like that.
So it was a long day. I mean, when you can't get an out or a fill from the exchange, it puts us and the customer in a bad spot. So what we did was we took, we had a few hundred orders on the open, 300 to 400. We went in there and manually filled all of them at the opening price if it was through their limit price. And that takes some time. So the amount of people that were calling in was, obviously we couldn't keep up with it. We did a great job. Like I said, we had 26 people on the phone. We were telling them they were filled. We were waiting for execution desk to fill it. We would go ahead and put orders in, like a sell stop and a sell limit. But you could tell a lot of these people were expecting a different reaction to the marketplace than what occurred. I mean, people were thinking that they would get in and this thing would be at $60, $70, not really realizing that at $60 or $70, its market cap is bigger than that of Google and Apple. I mean, people have to understand that at $38, or it's a $100 billion company, and double that, it's more than Google, who's definitely has a better revenue stream than Facebook.
Exactly. I mean, think about this. Facebook at its IPO price was was priced something along the lines of 60% of the value of Google, which is absolutely ridiculous. I had a buddy make a comment today. He goes, Facebook goes down, people get, college kids get angry and throw their remote control at the TV. Google goes down and the entire world shuts down. And yet Facebook has a 60% valuation. I think not. And this is going to lead kind of into our John, before we lead into kind of the next part of this discussion, do you have any kind of information on what happened with NASDAQ, what happened with the IPO, and kind of what NASDAQ did that screwed up so hard?
Well, they haven't made it official yet, but we route a lot of our orders through Knight Capital. And if you saw CNBC Monday morning, there's a gentleman. You saw Joyce up there?
Yeah, I did.
Yeah, I mean, what a stand-up guy, very very direct. He did not mince words, and he says this is the blame lies completely at the feet of the NASDAQ. I have not heard what the problem is, but I gotta imagine it's got to be capacity. I mean, if we and every other broker-dealer we're seeing unprecedented amount of volume on our website for one particular security on our phones. The traffic was through the roof. I mean, I told my boss, I'm like, you better get up to the, those guys running those servers and make sure that they're all, humming up there, because we're going to see some volume here that we haven't seen, since the flash crash or 08.
Yeah.
And if we had, we didn't have system problems. We had capacity problems dealing with all the customers that were calling up because of the NASDAQ problems. But I can imagine that had to be one of the issues. But, think about it in their shoes. They have one of the biggest IPOs, and there's a small glitch, and they say, go for it. I mean, it's what are they going to do? I mean, I guess maybe they made a wrong call, and we'll see a few heads roll. But, I mean, what have you heard, Mark, about, like, what the actual problem
I don't know, but here's all I will say is the NYSE had to be giggling and laughing and just ecstatic at what had happened. Because say what you will about the specialist system, but if this IPO had gone up on the New York Stock Exchange, there's no way they would have had this type of problem. No way. Because there would have been somebody in between to solve, and I know it sounds silly, but there would have been somebody in between to step in and take care of the problems. It goes to show you why there are still specialists and things like that and market makers, and why the human element actually does still matter. I mean, on a scale of 1 to 10, how ecstatic is the NYSE about the result of last Friday?
Yeah, it's a 10, easily. I mean, and you're right. I mean, the human market maker does not shut down for a glitch. No. I mean, if you have these IT guys saying, "Hey, it'll be a few more minutes," I mean, you can't do that in trading, especially not on an IPO. We all saw what happened to I know that not many trades got off, or if any at all, but what was the exchange that went?
Bats.
Yeah.
Bats that put itself public on its own exchange and then failed miserably. That was the NYSE is now 2 for 2. If you think that that's not going to steer every major IPO to the New York Stock Exchange, you're nuts.
Except when are we going to have another IPO after this, black guy?
Yeah, no kidding. That leads us to the next point, which is Facebook's valuation. Now, you heard me kind of make my point. Tim Navabi sent us all a nice email, and I'm not going to say what his opinion was, but what he said was, does Facebook start to look like a decent buy here at a price of $31 a share and a market cap of about $73 billion. What do you think?
We were talking about this again this morning because it's not how's your morning or good morning. It says, we always say, where's Facebook at now in the morning. But no, we were talking, and it was in the it was in the upper 20s that we were looking at a possible buy. We want to see it break 30. It's too close not to test it. People might have stops hidden right below it. Why not do a little more exploring? It's only been 3 days. It's going to be around for a long time.
100%. I would step in. I would start stepping in around 28. That's which puts it. Let's see here. I'll give you what that valuation would be. It's a valuation of about $65 billion. And if you consider Google has a valuation of $200 billion, that starts to make some sense to me, right? I mean, a Facebook which is a growth company that has a current valuation that is, a third to a quarter of Google. I can maybe live with that valuation. What do you think?
And that's right at 28 at 65.
Yeah,
I thought we were approaching that. I mean, it's off 20% in the last. Okay.
Well, it was at 100. It was at 100. Maybe this is as of this morning. The fundamentals I'm looking at, which is entirely possible.
No, I just it was trading so much times its earnings. I mean, not earnings, but I mean, it's just.
Let's do some math. 38. No, that makes sense, right? 28 over 38 is 73% of the 100. What was the opening market cap? 105 billion or 110?
105, I think. Yeah.
Yes, that puts it. Yeah, I mean, that actually puts it higher than that. So, I think 65 billion that's about 65 billion. That's probably about right.
2.1 billion shares, right? Something like that. Is that right?
Mm-hmm. The float is 421 million shares.
Oh, wow. And they increased that 2 days before by 20%.
Yeah, so let's do 421 times 28. I mean, well, no, that's 12. That's about $12 billion, and they put what, 25% of the value out, or what was it? 20% of the value out, something like that.
That sounds about right. Yeah, 22.4 total.
It's like a $60 billion cap. Yeah. So I would say right around 60 to 60. I mean, I would scoop it at $50 billion at a $50 billion valuation, right?
And we were talking earlier too that I think you're seeing a lot of downside pressure too, is because a lot of people jumped in there. Now they weren't going to stay in there for more than a couple days anyway, right? They were expecting the LinkedIn or the big move up or the Google, and they're not seeing it, so they're getting out, cutting their losses and running. So at one point, I think it will swing. The pendulum will swing too far to the downside, and you'll be able to get in and and scoop it.
Well, I'm going to wait for the options to list because.
Then you can price it,
Right, and the interesting thing is, I had somebody ask me today, Mark, where do do options typically price too low or too high? And the answer is the vol is almost always too high. Google is about a 29 to 30% volatility. LinkedIn is somewhere around 70. This has had a rough opening, but I still would be shocked if Facebook had a vol much over 40 to 45% when it lists, and I still think that's going to be too high.
Yeah, if you haven't mentioned it on this site or on this podcast, the options are supposed to come out a week from today, 29th. And look out for those put premiums, and I'm sure we'll see some people putting some risk reversals on. Some people trying to sell it, short the stock. We usually don't have it for 30 days.
Right.
And like I said, we're a derivatives firm. We're probably not going to have really much to lend out either.
Right.
When it does become available.
Do you think that's going to be that hard to borrow?
With us, it will be. Yeah.
With that much float out there, I mean, I'd be shocked if it goes hard to borrow. Wouldn't you?
At Options Express, I think it will. But I mean, at Charles
Schwab,
Fidelity, no.
Yeah.
No, they don't have issues, for buy-ins like we do. I mean, we take it very serious here and have a lot of procedures in place to monitor it because it's obviously something that the SROs like to keep their eye on. But I don't think we'll be seeing many people short selling it.
No, I'm gonna be thinking that if on the 29th Facebook comes out and it's trading below 30, I'm gonna start selling put spreads. I think.
No, I think that's right. 25-20 put spread.
Yeah, something like that. Yeah.
I mean, the vol will come in as, but we'll be able to see if it's hard to borrow by what the puts are skewed to on that day or the next day. It'll be interesting to see. I mean, I've never seen them get options out this quick, so it's kind of obviously it's getting a lot of demand from the general public.
Just a little.
So that's going to be another interesting day.
Yeah.
People will begin to learn about options prior to the morning of the 29th.
They won't. So with that, let's cut out of that extended express block, and let's move into around the block.
Around the block.
Here's around the block. This is where we're going to tell you what we're looking at, and we're going to throw in some plugs. And you're going to be nice guys and have caught all of the great information that we put out already, and you're going to listen to the end of the show, whether you like it or not, and catch our plugs.
And if you like the show, the Sebastian Garriga show, Longo wants to hear that. Make sure you reach out, take a few minutes, send an email about what an exemplary show that we put on when we're half staff. I'm not sure what happened to the Know Your Options guys, but you know them.
Right.
They're always worried about growing that business. So there is one thing I wanted to mention. I was going to cover in the Express Block, but it's too fun talking about Facebook and the goings arounds of that day. One of the things that Longo talks about on this show is the fact that the CBOE was looking to list weeklies. They were looking to list Mark wanted them to list weeklies like the CME does with their weekly E-mini S&P options. Well, they're doing a pilot program. I know you're probably aware of this too, Mark, on the CBOE memos that they shoot out. Sometimes there's too many, but this one actually pretty good. So just to get the word out there, we'll definitely have somebody repeat it on that Thursday show. But on May 31st, the CBOE will extend the listings of their PM settled SPX end-of-week options to include the following expirations. That's going to be June 8th, June 22nd, and July 6th. And what that means...
Oh, that's awesome.
Yeah, isn't it? I mean, it's something that we've talked about a half dozen times on this show, is that they're now going to have 5 consecutive weeks of end-of-week of expiring SPX options. They're not going to, as they do with the monthly, they're not going to overlap. So what you may see is a couple of weeklies. You may have an end of quarter in there. You may have a standard third Friday expiring option, but you'll have 5 running at all times to kind of better hedge yourself and not have to wait for those Thursday ones. I mean, we get that all the time, especially when the monthlies are around. They're like, where is that next week one? It will be out there. So you can almost have a 10-day, 12-day option all the time.
Yep, that's awesome.
Yeah, so I imagine if it takes off, other cash index will respond. The CBOE obviously has always been very quick about being very dynamic and changing these on a whim. But I think this is a win for both retail and for the exchange. So, like I said, on Thursday, May 31st, you'll see those new listings. We'll have them up on the website. If you see any issues, please let us know. And if you have any questions, just give the trade desk a call. Other than that, around the block, we had talked about energy at the beginning of the show. Keep an eye on the crude inventories report that comes out tomorrow at 9:30 Central. Other than that, it's going to be kind of a quiet economic release. We do have the 3-day holiday coming up this weekend. Equities will be closed Monday for the holiday. Futures will have an abbreviated session. We do put that holiday calendar up on the login screen. Even if you're not a OX client, you can go to the login screen and still take a look at some of those hours. It is helpful if you are a commodities trader to know when they are going to cease trading. Another thing wanted to put out there, the grains starting Sunday night, this past Sunday, went to a 21-hour trading schedule. Feel bad for those guys on the floor because that'll probably further erode the volume that makes it to the pits, if anymore. But the new hours are going to be from 5 o'clock Central to 2 p.m. Central. The settlements for the options will still be based on the 1:15 pit close, so that is important to remember. So, a couple of changes in the securities and the commodities that we're trading, and but overall pretty light economic week, and we're going to probably see the volumes taper off as we get closer to the 3-day weekend.
Yeah, and around the block, I would say the same thing. Here's one piece of advice I will give you guys: is if you think that going into this long weekend that there's going to be a great opportunity to sell premium and be able to buy it back on Friday, think again. One thing that might be interesting, and John, stop me if this sounds silly, you might be able to actually get away with selling premium on a Friday afternoon and being able to collect all 3 days of decay if you've got the guts to be short over that long weekend, short all that premium, because I find it hard to imagine that a lot of people are going to want to go short over the weekend.
So you think options will be bid going into the close Friday? Because I would think that it was just the opposite.
Well, normally I would agree with you 100%.
So what do you think is different?
If you look at what's been happening the last 2 weeks, they've been bidding up options into the close on Fridays because they're all afraid of the weekend.
Yeah, that's true. That's true. But even at these high levels, I mean, the VIX. I mean, we're at a monthly high here in the VIX cash. Looks like.
Yeah, I know. It's interesting. Maybe I'll be interested to see. That's entirely possible. So. Who knows? Anyway, I wouldn't get overly excited about dumping premium ahead of the weekend. Is something I would definitely say.
So keep a couple in the back pocket. See what happens.
Yes.
Yeah, because if nothing does happen, right? I mean, that's going to come out on Tuesday.
So with that, hey, anything going on in OX land that people need to hear about?
Yeah, I don't think we've mentioned this one in a while. So let me just find the upcoming live event. I know it was the one in Philly that was coming up on Tuesday, May 22nd. We are kind of pairing with it's a CBOE Philex Evening Workshop. It's on, let's see here, May 22nd, 6 p.m. to 9 p.m., Crown Plaza in downtown, beautiful Philadelphia. Gotten a lot of comments from people after I badmouthed Philadelphia. Supposedly, Michael Vick isn't the mayor there. I must have spoke wrong about that. But it should be a good event. It is free. The presenters from the Options Institute, the Chicago Board of Options Exchange will be there. The walkthrough, planning options trades, trading volatility using the VIX. Everything that Sebastian gives away for free here on the podcast. You'll have to drive out to Philadelphia to get it in person, but should be a good show. There's a link on the CBOE website. If you call us too, we can email the information out to you, or you can click on the live events on the inside the private side of the website. How about you there, Mark? What webinars can we expect?
I've got. I'm going to be doing a free webinar in conjunction with The Street on June 6th. Information to follow. That's about it, really. I'm going to be my book. I just got my copies of my book from the publisher, and the book is now available on Kindle. So if you're interested in buying my book, go to the Option Trade. Google search the Option Traders Hedge Fund or Mark Sebastian on Amazon, and you can get the book. It comes out. It'll go out delivery on, I believe, June 4th. It's we put a lot of hard work into it. So please support us.
I do mostly the Monday show, so I don't get to. I'm on with Lobster Andrew. Mark Longo will sometimes use Lobster when he talks about Andrew. What's the name of the book? Tell me about it. Can you give me the 30-second?
It's called The Option Traders Hedge Fund, a business framework for trading equity index options. It's basically a handbook on how somebody that's read like a Nadenberg type book can turn their option knowledge into a business, and then gives the trader kind of the tools to turn that business into hopefully a profitable business. It covers things like money management, risk management, how to execute and manage individual trades. We go through things like skew. It's certainly not a simple book, but if you've read Nadenberg or Macmillan, this is going to be something you definitely want to read as a follow-up. And, interestingly, I've got a great quote from trade selection to, and this is on the back of the book, from trade selection to execution, risk mitigation, and volatility analysis, everything you need to know is contained within these pages. Whether you are a newcomer to options market or a seasoned options veteran, the insight analysis contained in this book will provide you with the proper framework for your options trading. Mark S. Longo, founder of the Option Insider Radio Network.
Wow.
So there you have it. Doesn't get much better than that, does it?
Kudos to your editor. No, that does sound like a great book. But I can get it on Amazon if I'm not using Kindle? I can find it on there too?
Yeah, absolutely. It's cool. The pre-sale price is lower than the regular price. So
cool.
It's absolutely the right time. So
I'll check it out.
Cool. And with that, we still managed to get in a good 50 some odd minutes here, John. And this was a great show. And don't worry, Long will be back on Thursday for Friday's show. And we'll see you next time on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.